Alright guys, today we will have an overview on the market, comparison between Q2 and Q1. We'll look at the gross domestic product and a key economic indicator, economic growth, oil market, the impact of oil prices on Dubai real estate market. We will have a look at the sales transactions in both primary and secondary, including off-plan and ready, and off-plan and ready, including primary and secondary. We will look at the different sectors of the market. Gross domestic product, GDP, as you know, is a key indicator that is used to measure the health, the performance and productivity of an economy. It is basically the total monetary value of all finished goods and services produced within a certain period of time, which is usually measured quarterly or annually. GDP of the UAE last year was approximately $500 billion, which is like 1.85 trillion dirhams. In 2024, it's projected to grow by 3.7%. The projection was upheld by the Central Bank of the UAE, and the Central Bank also having a strong projection of 4.2% growth in the GDP for the next year. So this means that economically the country is doing good. In 2023, Dubai's GDP was like 507 billion dirhams, and in the first quarter we had a growth of 3.2% compared to the same period of last year. In the oil-rich countries and oil-exporting countries, oil prices have an impact on the economy, on the GDP, and GDP will have an impact on the real estate market. So basically what happens in the oil-rich countries, whenever the price of the oil fluctuates, whenever the price of oil goes up, means the government is making more money. Government will be able to spend more money, will be able to invest more money, will be able to create more jobs, and hence the confidence of the investors locally and internationally will be more, so that the real estate market, the economy, the GDP and the real estate market gets better and better. In Dubai, however, the impact or the reliance of the economy and the real estate market on the oil prices have been reduced drastically over the past few years. When I came to Dubai in 2002, if I'm not mistaken, when I was studying, 25% of Dubai GDP, not the UAE, 25% of Dubai GDP was coming from oil. Today, it's reduced to 1%. 1% of Dubai GDP is coming from oil, and 99% is coming from non-oil sectors, including tourism, finance, trade, real estate, and other sectors, which have grown a lot over the past few years. In the 1980s, if I'm not wrong, the dependence or reliance of GDP, Dubai GDP, on oil was more than 50%. So now, from 50%, it has been reduced to 1%. That's why fluctuations in the oil prices will not have a heavy impact on the GDP of Dubai, and hence it will not have a heavy impact on the real estate market. What's happening in Dubai is that oil prices have a reduced impact on Dubai real estate market, because currently less than 1% of Dubai GDP is coming from oil and 99% is coming from the other sectors. The economy has been diversified. One more action, one more strategy that the Dubai government has taken to protect and shield its economy from the fluctuations of oil prices have been the global approach. Now we are not getting investors from oil-rich countries, from oil-exporting countries only. If all your investors, if majority of your investors in your real estate market are coming from oil-rich countries, are coming from oil-exporting countries, fluctuations of the oil price will affect on their economy, and hence it will affect on your real estate. Let's say majority of your investors are coming from oil-rich countries. Price of oil drops, example, from $100 to $40. Their economy will go down. Their power to purchase will go down. When their power to purchase is coming down and you have a huge dependency and reliance on those markets, your real estate market will have less demand. So So this approach has been changed to globally wide. So now we are getting investors and we are getting attractions in different sectors from all over the world, not only from the oil-dependent countries. That is why dependence or reliance of Dubai economy and Dubai real estate has been reduced a lot and protected against the fluctuations of oil prices. Economic diversification. Dubai has strategically diversified its economy into trade, finance, tourism, and other stuff. Non-oil sector growth. The non-oil sectors like trade, finance, real estate, tourism has grown. This helps the stability of real estate market, and government initiatives like investor residence visas, which brings more attraction to Dubai real estate market. And the global appeal. Global investment appeal means attracting its investors worldwide, not only from oil-rich countries or oil-dependent regions. Tourism and hospitality. We have always experienced, and whenever we are having more tourists in Dubai, there are more demands for real estate as well. Right now, as we speak, we are talking about 17 to 20 million tourists visiting Dubai only every year, right? Until a few years ago, we were having 10 to 15 million visitors every year, while now, this year, only in the first half of 2024, Dubai received almost 9.5 million tourists. So now we are looking at 17 to 20 million tourists. Increase in the tourism will lead to increase in demand for both residential and commercial properties. This chart was published by Reading in their Q2 market overview. It is showing a comparison between sales of off-plan and sales of ready properties in both primary and secondary markets. For example, the blue is showing off-plan. Off-plan here, it's including primary market and secondary market of off-plan properties. Volume of transactions. Next slides we will look at the value. So here, as you see, there have been a 37% rise compared to the previous year, and 10% increase compared to the previous quarter. So in the first half, we had 37% increase. In the second quarter, we had 10% increase compared to the first quarter. Compared to the previous quarter, the off-plan had an increase of 18%, and the ready properties, the volume of ready properties dropped by 2.8%. Compared to the same period last year, there have been a 64% increase in the off-plan properties and almost 2% increase in the sales of ready properties. Now here is a comparison between primary and secondary, including off-plan and ready properties. So in terms of volume, they have had 12% increase in the primary sales and almost 8% increase in the secondary. Quarter 2 to quarter 1. Year 24 to year 23, we had 56% increase in primary and 14% increase in secondary. So as you see, everything has increased in both off-plan and ready properties in both sectors of primary and secondary sales. The value of quarterly residential transactions, here we are looking at the value. In terms of value, again there have been an increase in the market, 38% growth compared to the same period last year, and 11% growth compared to the previous quarter. Q2 to Q1, 11% increase, 24 to 23, 38% increase. Quarterly, 14% increase in off-plan and 5.6% increase of the ready sales. Annually, this year we had 11.6% more off-plan transactions in terms of value. The total value of off-plan transactions this year was like 12% almost higher than last year, and 10% increase in the ready properties. Average price of quarterly residential transactions, dirham per square foot. In terms of price per square foot, in the primary, the average price of primary sales direct from the developers have been ranging between, the average have been around 1580 per square foot, and in the secondary market the average have been 1300 dirhams per square foot. Now you have a better image, now you have a better picture. If you are selling a property for a certain price, if it's below 1300 dirhams per square foot, you know that that property or that transaction is below the average, and in primary 1500 or 1570 per square foot is the average price of primary sale. Let's look at Q4 22 compared to Q1 23. The average price of primary in Q4 22 has been 1564, while in Q1 23 has been 1298. Does it mean that in Q1 23 the market was lower than Q4 22? Was the market lower? It wasn't lower. What does it mean? In that certain quarter, more luxurious projects were introduced and sold in the market. Market share of the developers overall, including primary and secondary, in the second quarter of 24, Amar had 18% market share. Means 18% of all the properties sold in Dubai, including primary and secondary, off-plan and ready properties, 18% of them were projects or in the projects or communities of Amar properties with an average of 2100 per square foot. Damak properties 8% at an average of 1500 per square foot, and the third market share was with Shoba 6.4% with an average of 2200 per square foot, majorly in Shoba Heartland 2, and a few percentage in Shoba Reserve. In terms of primary sales only, MR had 16% market share in the second quarter of this year with 4200 units sold at an average of 2100 per square foot, majorly in Dubai Hills and Dubai Creek Harbour. And Shoba had 8.6% market share with 2200 units sold in the second quarter with an average of 2200 dirhams per square foot. Azizi 8% market share in the primary market, 2000 units sold at an average of 1800 per square foot, majorly in Venice and Azizi Riviera. Damak properties 7.5% market share, 1900 units sold in the primary market at an average of 1600 per square foot. Overall, Amar had almost 20% market share at an average of 2000 per square foot, primary, secondary, off-plan, ready. Damak properties 11%, 1600, and Nakhil 4.9% market share due to the new projects launches that they had last year. Comparison between the price per square foot between quarter 1 and quarter 2 of townhouses and villas. In majority of the areas, the price per square foot of townhouse and villas in quarter 1 compared to in quarter 2 compared to quarter 1 has increased or decreased? Majority increased, except for Palm Jumeirah and Jumeirah Islands.
Correction.
In Palm Jumeirah, in first quarter we had 6300 dirhams per square foot. In Q2 we had 5900 dirhams per square foot. Jumeirah Islands first quarter 3100, second quarter less than 3000 dirhams per square foot. Rest of the areas, majority, and especially the townhouses and villas communities, these days when they reach to the completion and handover, that is when the major increase in the prices is happening. Apparently because that is when the mortgage buyers are being added to the market, isn't it? Like what's happening in Kaya. It's near to the handover now, that's why you see day by day price. Apartment sale prices per square foot quarter 1 versus quarter 2. Almost everywhere we had an increase in the prices. I couldn't see any area or any community or project where in quarter 2 apartment prices per square foot has reduced compared to quarter 1. Where in from 520 to 540 per square foot in International City, Blue Waters increased from 5100 to 5500 per square foot. Business Bay from almost 1700 to 1800 per square foot. Dubai Hills 2000 to 2100 per square foot, including primary, secondary, off-plan, ready. The rental yield of townhouses and villas in terms of percentage, rental yield, ROI, last year was amazing, was the highest I ever experienced. Now, in some areas, there have been slight correction. Although the price per square foot is increasing, but in terms of ROI, percentage, ratio between the gross rental amount and the selling price or the value, this ROI percentage has dropped slightly. Summertime was one reason. Handover of some projects was another reason. Many tenants have become owners, so they are not renewing, they are moving to their own places. Summertime is another reason. Did you notice that the Palm Jumeirah prices per square foot reduced selling price from 6,200 to 2,900. Rental has been the opposite. Interesting, isn't it? So in the Palm Jumeirah Garden Home Villas, in terms of selling price, the average price has reduced from 6,300 to 5,900 per square foot, while the rental amount increased from 150 to 170 per square foot. In downtown, I never saw such a high ROI like last year. Never. In downtown, ROIs have always been 5 to 6. Last year they reached to 8 plus. Apartments average rental per square foot, Q2 compared to Q1, not much difference. These are the apartments and townhouses and villas projects in Dubai that are generating the highest gross rental income. Apartments, the highest rental income is in Rimram, and in villas, Damak Hills 2, Jumeirah Village Circle, and District 1. In terms of, guys, the ROI in Rimram, the average have been 10.4%, Dubai Silicon Oasis 9. Gross rental income. Gross rental yield, apartments are the blue on the left, and the greens are the villas and townhouses. Damak Hills 2 is generating the highest ROI. Then you have Jumeirah Village Circle and District 1.